Hello everyone, my name is Aanchal Nigam and I am from the Department of Management, School of Management Sciences, Lucknow. Today's topic is Government Securities Market and it has been taken in the specialization finance subject of MBA, that is Financial Markets and Services. The main objective behind taking this topic in this subject is to motivate the students to have more knowledge about government securities market. Another objective is to inculcate the understanding about the working of government securities market, especially for probing the problems of investors. There are some of the outcomes also after studying this particular topic for the students and outsiders also. If I talk about government securities market importance in life, then the outcome will be that for the students that they will be able to have an analytical skill development to choose the government securities from the market and invest their money with brain. Another outcome will be that they will have a kind of knowledge regarding government securities at a proper manner. Moving on towards the main topic, that is government securities. First of all, we need to understand what is government securities and why it is important. Government securities are financial instruments and securities that are being issued by a government towards raising a loan from the public. After the SEBI regulated, Securities Exchange Board of India came in 1992. But before that, there were so many things that was not going proper in a proper manner and very much malpractices are being done, including the insider trading as well. At that particular moment also and now onwards also, government at many times need large amount to carry out its welfare activities like infrastructural development, other procedures to be developed like process project plans and other many proposals to handle. Government needs to have expenditure and they have money from that particular market also. By means of indirect and direct taxations or by having assets to be headed by government, these market of government securities keep them avail the required cash and to meet the deficit units for properly handling the spending units. Government securities comprises of bearer bonds, promissory notes, bond ledger accounts, etc. These are risk-free securities and also called as gilt-edged securities. It raises revenue by way of taxes and income from ownership of assets. Government raises short-term and long-term funds by issuing these securities. It is a part of debt market and very dominant nowadays also. Coupon or interest that are offered on government securities are either predetermined by Reserve Bank of India or arrived through the competitive bidding or auction process. Now, what does this auction means? Basically, auction is a kind of process in which the public used to ask for auctions and by means of the bidding they need to be allotted with the government securities accordingly. Moving further, it is important to have a knowledge about features of government securities. First of all, we need to understand that government securities are issued at face value. Next is government securities carry a sovereign guarantee and hence have zero risk of default. We will discuss about market risks and default risks further slides. Investors can sell these government securities in the secondary market because of the reason that they have a good rate of return. There are many types of government securities like treasury bonds, treasury bills, state development loans, etc. that will be discussed in further slide. Government securities can be held in dematerialized form, means it can be available online only and there will be no kind of offline paper need to be taken for having the government securities in hand. It is very beneficial for investors to have investment in government securities. Auctions are performed through electronic platform that is known as NDS. NDS is negotiated dealing system. Basically, negotiated dealing system is used to for handling all the auction procedures that are being performed online. Basically, auctions are of two types if I talk about. First is Dutch and the other is French. If I talk about Dutch, then it is a form of auction that are being taken under uniform prices, and if I talk about French auction, that will be taken on discriminatory price bidding. Moving forward, government securities are not attractive towards the TDS, or we can also known as tax deductible at source. Moving further, most government securities qualify as statutory liquidity ratio investments in the government market. The interest rate of government securities is fixed for the entire tenure of the instrument and cannot be changed during its tenure. The government securities redeemable at face value at the time of its maturity. The maturity period of government securities can range between 2 to 30 years. Payment of interest on government securities are paid on its face value. Basically, these are the participants of government securities market. The first is commercial banks, the next is insurance companies. Commercial banks includes Punjab National Bank, State Bank of India and other many banks. Insurance companies may be LICs or general insurance companies. Financial institutions like IDBI, ICICI, IFCI, SFCs. Provident funds, mutual funds whether open-ended or closed-ended funds schemes can be included in this securities market. NBFCs like non-banking financial companies can also be a participant of government securities market. If I talk about the issuers of government securities market, mainly they are central government, state government, semi-government like municipalities, IDBI, IFCI, NABARD, housing boards, etc. These participants used to maintain the government securities market to a proper manner and they used to handle the all the investments that are being done by the government, either by the institutions or by the firms. Moving further, we need to understand, after having a knowledge of participants that are being included in government securities market and the issuers of government securities market, we need to understand the advantages. Government securities offer lower volatility and greater safety when compared to the corporate bonds. These are much more safer than corporate bonds because of the reason that government securities are backed by the sovereign guarantee of semi-government and government. It does not attract at all the TDS deduction on interest payment, that is tax deductible at source. It offers transparent transactions and simplified settlement procedures through NSDL and CGSL. Basically, NSDL is National Securities Depository Limited. NSDL is important share depository that is being taken the online depository of shares. CSGL are constituent subsidiary general ledger account, that is a kind of service that has been provided by Reserve Bank of India to the public for more safety. Next advantage of government securities market are it offers higher diversification opportunities to investors because of the reason that investors, if they have proper amount of capital that has been raised by government securities investments, then they will be able to diversify their business to a great extent and they will be able to have high returns through these government securities at the time whenever they are in need of money. Investors are offered higher leverage while borrowing against government securities to a great extent. The next, if I talk about, is risks that are involved in investing government securities. There are so many risks that are involved while investing in government securities, but yeah, the main risk is a kind of market risk. If I talk about market risk, it impacts the change rate to an extent. The change in interest rate can affect the value of government securities to an extent on the secondary market base and is inversely proportional to the change in the rate of interest in the market. Basically what it means that when government securities go higher, then the interest rate will be go down, and if the interest rate will go higher, then the government securities value will go down. So, this is a kind of relationship that is proportional in nature between the government securities and its interest rate. Moving on further, if I talk about, there is a risk of default that is not in the government securities because of the reason that the default of timely interest and principal payment. Government securities are backed by a sovereign guarantee, as I already discussed about it in the previous lecture, in the previous slide basically, and as a result it is free from the risk of default. So, there will be no kind of default in terms of payment making to the investors as a whole. Moving on further, we need to understand, after the risks involved, the participants, the issuers, and about government securities market and its features along with its advantages. It is important to understand the different types of government securities as well. So, first of all, we need to understand what is treasury bill. Basically, treasury bill are short term bonds which have a maturity period less than 1 year. Means before the completion of 1 year you can get the amount by if you have invested in treasury bills. Treasury bills are currently issued with 3 different maturity periods: 91 days, 182 days and 364 days. Basically these are zero coupon bonds. Why? Because these are not paying any kind of interest. They are zero coupon bonds because of also the reason that the difference between the discounted price of the issued bill and the face value will be the profit that will be in the hands of the investors. If I talk about cash management bills, the cash management bills are government securities issued with a short validity, which is usually less than 91 days. As I already said, these treasury bill and cash management bills are both like zero coupon bonds, and between the difference between the face value and the discounted price will be the benefit of the investors. Moving on further, we have dated government securities. Well, dated government securities are securities and bonds that are issued by the Reserve Bank of India on behalf of the government, and these bonds have a predetermined or fixed maturity date. Like if I purchased a 91 days treasury bill and its value is 100 rupees, but on discount I got it at 98.5, then the rest of the amount will be the discount. So, the discount price will be my profit. Next, if I talk about it is state development loans. The state government issues state development loans with the purpose of meeting their budget deficit and budgetary requirements. Budgetary requirements that can be for infrastructural development, that can also be for other projects that are being done in the coming future. If I talk about some of the denominations that are being provided to the government securities market by the governments, the first if I talk about is CG, that is central government. Well, central government provide minimum 10,000 rupees and it goes to maximum rupees 5 crores. It will be the multiple of rupees 10,000 as a whole. If I talk about the state government, so state government or SG I am writing here, state government will go with minimum 1,000 rupees and it can go on with the multiples of 1 to 5 crores. These are very beneficial on the part of the investors as well. Now, if I talk about the government bonds, the government bonds basically goes from minimum 5,000 rupees and it will go up to its multiples. So, these are the denominations that are being provided by the government securities market by the government basically, and they have regulated this market on a proper manner, in a proper manner. If we talk about the current scenario, as Reserve Bank of India mentioned that it will conduct a simultaneous purchase and sale of government securities under open market operations for an aggregate amount of rupees 20,000 in 2 tranches. Basically, these kinds of things are being done by RBI as a whole because of the reason they want to have a kind of liquidity in the market. The maturity period that the RBI will be going to sell out about the securities, that is October 2020 to November 2020, means between these 2 months there will be the maturity period of those government securities which they are going to sell out, and the securities in which they are investing and purchasing it, they will be differ, like in one will be in 2024, one will be in 2027 and as like it. Now, you are thinking maybe that what is OMO or open market operations? These are being undertaken by the RBI as credit creation, or you can say to understand or to handle the credit control policy. Open market operation is an activity by RBI to give liquidity in its currency to a bank or group of banks. Sale and purchase of government securities and treasury bills. When RBI wants to increase money supply in the economy, it used to buy the government securities. Okay. So, by buying the government securities, the money will go in the market, it will flow and the liquidity will increase. Vice versa, if we talk about, if RBI wants to suck out the liquidity from the market, then it will sell back the securities, government securities in the market. It is very important on the part of RBI to handle these open market operations as a whole, to control the marketing features that are being provided to the investors as a whole. After COVID-19, these government securities are very important for government, as there is a kind of environment of war that can be started, that might be undertaken by our Indian government, because of the reason that China is crossing our borders and we have some of the difficulties. So, maybe in the upcoming future, because of this emergency that is coming out, they can increase the sales of government securities, and so that the liquidity will be maintained at a proper manner, and will be in the upcoming future they will purchase it back and simultaneous actions will be taken. So, this is all about OMO. So, this is a kind of current scenario as mentioned in the recent news websites also. So, basically government securities are very much important. If I talk about, as I already said, auction procedures, basically government securities market is under regulation because of the reason that government securities market comes under the debt market, and it is very important because of risk free securities, that this is the nature of government securities market. And through competitive bidding or auction process only, these government securities are being allotted. It is very important for government also to keep this available for the people of the country as well, to raise the capital when and where it is required. As I already said about government securities, this is a kind of gist I am providing students for you to understand the whole thing about government securities market, because if you will have an idea about government securities market, you will be able to invest more through government securities. You will be able, if you get a chance to work with RBI, you will be able to understand the open market operations that are being undertaken by Reserve Bank of India as a whole. If you will be a part of central government, state government, or any kind of municipality that comes under semi-government authorities, you will be able to understand the denominations that are being taken by the government or that has been used for giving a purchasing option for government securities. So, this is very important, students, to understand these things. At last, I want to sum up that government securities are very important to raise any kind of revenue, short term or long term, and that's why the reason is that government securities want to include it in the matter of investments, and they are also making or giving chances to the public to invest in this kind of security. There are the issuers, as I already said, and they used to use the auction platform, that is negotiated dealing system. It is important to understand this dealing system also, because if you have an understanding of these online platforms, if you have an understanding about these platforms of electronic procedures to work with the government securities in a proper manner, you will be able to handle any kind of problem, any kind of issue that can be a part of your upcoming career scenario. So, these are some kinds of very much important benefits for you people to have an understanding about all these portions. You need to understand about NSDL and CGSL as a whole, so that it will be easier for you all. Thank you so much for understanding the topics, and have a nice day. Thank you.